Support and resistance study, oil futures. It's on a 5-minute time frame for intraday. So let's begin here. We drive up to here and we react. We push up and react. So at this point we notice we've got 1, 2, 3, 4 touches. So I would draw that in just as we, as this bar closes, I draw this in. Okay. Now look what happens. We drive through this resistance with good price action. Decent spreads, closing firm. Then as we react, spreads narrow, choppy trading indicates basically it's no supply. And what should happen here? Resistance should now turn into support, and it does 1, 2, 3 times. And here we get a lovely spring that propels the market into new highs. Good trade. At the highs, we find some selling pressure. Okay, as we react down, as we get to about here, I will draw a line across the highs. Okay, as we push lower, and the market finds support here, we push up, and as we come back down past here, I'll draw a line across the highs. Okay, then the market finds support here and here. Now, what's important here is this R. Okay, as we react down past S1. Okay, I'm like, we're making, that's a high. Let me grade this. This is a high. This is a lower high. So as we break down past this S1, this is a lower high. So we have a lower low, and obviously as we break down here, we have a lower low. So, the very definition of a downtrend. But think about this, until then we've been bullish. Okay, because we spring, drive up into new highs. Okay, we react down, but we do hold above the support. We push up, we think, okay, we're going to test some more, so we do come back down, we test. And then, well, really it's S1. Yeah, so basically from S1, that's when we're in a downtrend. We're making lower lows and lower highs. However, it's this resistance level, and as we break here, the market, we don't need to study the price action. The market is telling us from structure alone, the market's weak. The sentiment has changed. It's as we break here with this resistance level, okay, that the market is telling us to be a seller. So from here, we come back down to S2. This is support. Resistance. So we've got support. It's held 3 times, and it held 4 times. There is a possible trade here, as we can see buying. Look, we see here as we come down, buying off the lows, buying. This bar here, we'd interpret that as no supply. So as we rally back up above these highs, we can let the market pull us in. Okay. So would we take this trade? Well, in our mind's eye, we know that we're in a downtrend. We're making lower highs, and lower lows here, and here. Okay. Yes, we hold support, and if we're nimble, we can get in here. But our target would be here, which was support, and support. So naturally, we would expect this level to be newly formed resistance. So is this worth the risk? Well, that's down to the individual. It is a valid play, but one must be aware of the structure. We would think that this level would hold as resistance. Now, we don't know it's going to drive up to here when we're down here. Okay, so this is not a high odds trade for anything past resistance. So we must be aware of the trade's limitations. I mean, this is good support. Why? Well, it's got multiple touches. It's acting like an axis line. We've got resistance, resistance, support, support, support. But what really makes this how can I explain this? This is a valid working support line. Why? Well, we have resistance here and we have resistance here. Okay, doesn't really tell us a great deal. It's the price actions close together, but it's this action here from these two bars that tell us that this level, for whatever reason, is important. Why is it important? It's because they moved it with force. Okay, they moved these bars with good price action. That's good, decent buying. Okay, and as we previously said, as we come down, there's no selling pressure. We hold, we spring, great trade. So when we come back down and we can see buying, and if there was volume on this little bar, we'd see there is a no supply. So as we do break these highs, we could let the market pull us in, but would we? Because this is resistance. It is a scalp trade, okay? But we have to be aware of the limitations. I do know, I am repeating myself here, but it's very important. We need to be thinking of support and resistance as trade entries and targets, okay? Now, even if you think in terms of risk reward, which I don't, we'll go into that at a later point. See, this is our risk. We need to put it under, under these lows here, which is about here. So our main target is here. So is this worth it? Well, it feels, again, that is down to the individual. Now, in a nutshell, I like to think that the structure, in this case the resistance, keeps us safe from taking this trade. Although, for all those reasons stated, this is a decent level of support. We can read the price action, we can let the market pull us in, but this is our main target. So is it worth getting involved? Again, that's down to the individual. So from here we come back down and we make a lower low. We rally. Now support has turned into resistance. It has contained price, and if one is adept and you can read this price action, you have good chart reading skills, you can take this trade. We come back down and then to test, and then we rally back up, and wow, what a beauty. This is a lovely example of an upthrust. Okay, yes, we do get some decent buying on the advance, but look at the bar. Take into consideration the background conditions. Highs, we're making high highs and lower lows all along. But most importantly, R1 has been respected. Okay, we are containing price. Previously here, we broke. It's like a flush to the upside, but we do get a lower low from here. So over a week. Now, as we come back up and it holds, now I'm interested in this level. Okay, it's logical thinking, yeah. So as we drive up here, and this bar pops its head above resistance, what this is doing is popping its head up above resistance. It's saying to any longs, any bulls out there, come buy me, I'm breaking, I'm breaking, come buy me. It's like a stop hunt. So then it reverses to close weak on its lows. Okay, it's an instant short by the close. So the key really, apart from the upthrust, because I'm not dealing with upthrust now, is the structure. The fact that it's held here, okay, gives us a license. So when we come back up to here, we're alert. Our ears are perked. We are looking for weak price action, which we'll learn in the next couple of sessions, to be able to read this and jump on board. Okay, if you are a skilled reader, you can jump on board here because you can see there's selling off the highs, and as you break down, we can still see more selling. You can let the market pull us in, but this is a no-brainer because we have this confirmed after the previous attempt. It failed because we penetrated, but we do make a lower low, and we still make a lower high. So we are still technically in a downtrend. And for those who are familiar, we could also draw a trend channel which contains price and would give us our targets. Okay, so if we're short from here, using support and resistance as our target areas, this would be our first target. Okay, and if we drew in this channel, which is very, very poor, this would have to be our second target. Okay, so the purpose of this chart and why it was used really is just to illustrate that support, resistance turns into support, and also be aware of the limitations of trades and how they're used for our entries, okay, and targets. Very, very important, okay. And also it gives us sentiment from the lower highs being made from the resistance, okay, along here, and the lower lows tell us from structure alone we're in a downtrend and we want to be short players. Okay, good. Any further than ever completed this study? Are there any questions? I'll give you a couple of seconds. Okay, I can see some questions here. Would you draw resistance from R2? No, but good question. I like the way you're thinking. No. Main reason, remember I said previously about Wyckoff and dams, you wouldn't build dams too close together in a reservoir, okay, and the same applies to support and resistance. Now, why wouldn't I draw that? And these, well, this would be pruned, this would be probably pruned, this would be kept, and this would be kept, okay, but this is your main one here. But why wouldn't I draw R2 is because of this line, okay. This is validated, this has been tested, it was support, it was support, it was support. We trade through it, we come back, it's resistance, and for all intents and purposes this is a hold because we drive up, okay, we drive up and then come back down and close. This resistance level has done its job, it's contained price back under, and for that very reason traders, if we rally from here, traders are going to be looking for this level here, this respected, validated, tested level of resistance, not this, okay. Although price rejects here, like it does here, this is too close. Like dams, this is too close. So all professionals will be looking at this level. Very good question. If you are trading intraday conditions, do you draw lines on all time? Yes, I will draw all structure on all time frames used. I look at weekly, daily, very important, 4 hour depending on the market you use, but my key time frames, because I'm primarily an intraday trader, daily, 60 minute, you can use 30 minute, 15 minute and 5 minute. The lowest I go is a 5 minute, okay. And I will keep, before you come in to start the trading day, all levels should be adhered, they should be applicated. The less you have to do live, trading. For those of you who've traded live, it can, especially in the beginning, it's you feel the pressure. So the least amount of work you have to do live, the better. So always be prepared. But via 5 minute chart, I will update and prune it as and when it needs it. So literally, during the course of the day, you are continually adjusting your 5 minute chart. You'll adjust your 60 minute chart, as and when it needs pruning. pruning, sometimes you don't adjust it because it's all contained within, your bounce in between a major support and resistance level. Daily, you do that, but you don't need to adjust your daily until the night before if you've broken an area structure. But I keep all structure, support and resistance, trend channels, axis lines, etc., on all time frames across all instruments. It isn't a lot of work. It's like anything, just takes time and a bit of practice. Good question. You said that. How would you enter on the spring third S1? Yes, that is a spring. Springs don't have. We will go into springs at a later date in full depth. You can get. Yeah, this is just a 3-bar spring. But why is this a good trade? Well, as we know, resistance. So this is support. We know this is support here. Okay. And we know it's valid support due to these 2 bars. They put force into the buying. That's active buying. Okay. Now, as we come down, there's something called shortening of the thrust. So let me just draw the price action. So here we dip under these lows. Okay. So as these bars dip under, they find no further selling, and it reverses to close firm. Okay, so we can buy the close of this bar because this finds no further selling. So the buyers know that, they buy, push it up, and it closes. Okay, these 2 bars here tell us there's no selling in the market. Why? Something called shortening of the thrust. Okay, we've got selling on this bar, and then we have selling on this bar. But note the spread. Okay, the selling pressure has diminished. The spread of this bar is much smaller than this bar, as it is here and here. And where has this occurred? This has occurred at support. So there's a lack of selling pressure at support. So it's of no surprise that the buyers come into the market on this bar. Okay, because we dip this no selling occurs at support while it's flushing under these lows. Okay, we will go into depth in these. Good question. If you take the trade at R2, where would your stop be? R2, the up thrust. I put the stop above the highs. Okay, I put the stop above the highs for up thrust and below the lows, fairly tight. For springs. Alternative, you can do the last swing high occasionally. It's very hard to do hypothetically. It all depends on context. How the market, how the price is, and how structure is around you. 9 times out of 10 above the highs. Okay, maybe higher. Now, just glancing at this, I can see that this is a 20-odd tick bar for oil. Quite a substantial stop. That may be a bit rich, depending on your risk tolerance or your count size. There is another way to enter here. Imagine, say, this is our up thrust bar. This is our 5-minute bar. Okay, now think in multiple time frames. Now we're going to go down. Imagine this bar comprises of. Now we're going to go down to 1-minute bars. We may have a 1-minute bar come up, come up, come up. Okay. And we may have volume like this, just steady, small volume. And then on our 4th minute, we come up and we come down and we break down here like this. So we push up here, come down, and we close back under with huge volume. So I would enter there. Why? Because I can read that the price action going up, small, narrow bars with very low volume. And where are we? At resistance, trying to break, push, drive up into new heights. And then we have this 1-minute bar here, which wipes out the majority of those 1-minute bars with 3 or 4 or twice the volume. Okay, we don't need to wait for the fifth minute bar to jump in. Okay, so using multiple time frames, you will gain an edge that most traders do not possess. Now, we do have a session on multiple time frames, a very good introduction, I think session 9, and this is a very advanced concept. Please don't concern yourself with this as yet. Multiple time frames, as I said, we need to get to know the principles, concepts. You know, we're only on structure at the moment. We have got a lot of work to do to get through. Alternatively, you can on this 1 minute, 5 minute bar, what I have done in the past is you can read the subtleties of the volume bar itself. So what do I mean? So as we push up, okay, you may see volume like this. Okay, so as we're pushing up, you may see volume. Then, so this is the break. So, and then we might see, so this is the volume from here to here on the drive up. Okay, and then about here, if we close back under, you see price come back up, and you see a surge like this. You know that this demand buying to get us from here to here is weak. Then as we come back down, we can see that this is better selling than this. So again, this is no demand at resistance, so we're trying to drive into new highs. Then as we come back down, we can see all this, you know, 2 to 3 times the size of the buying volume, and the bar hasn't finished printing as yet. Okay, now that is I know that sounds a little bit complicated. Just review, watch this video back, but that is an alternative. That is another way of using volume. I think that concludes our study for oil futures, our support and resistance study. Let's crack on and go into the next chart.